Hello everyone. Today is Sunday, January 31st, 2021. Our guest today is Thomas Luo. Welcome. Thomas is currently working as a quantitative trader at RBC Capital Markets doing electronic market making. Thomas holds a degree in Bachelor of Science, Mathematical Applications in Economics, and is a finance specialist, majoring in statistics and minoring in computer science. Thomas, welcome to the show.
Thank you so much, Gary. It's such a pleasure to be here. I've never been on a podcast before, but I have, obviously listened to it on a week-to-week basis. So definitely a pleasure to be here today.
Great, that's great to hear. So we'll just dive right into this. We have a lot to cover, a lot of questions, especially with the fiasco that is going on with GameStop and all these other stocks. We have to ask what the hell is going on. But before
Yeah,
we jump into all the technical details, I want to cover the
mhm,
basics. So first of all,
sure.
can you explain to me what do you do as a quant? Like, what is like a quantitative trader? Like, what are the different roles at a hedge fund or a bank or capital markets in general? So, can you give me like a
Mhm.
high level overview of how the business works?
Yeah, absolutely. So I'll start off with what a quant really is. So you can think of a quant as a data scientist, right? In every different industry, there's a lot of data that's available for analysis. So specifically in the finance industry and on the trading side, so I'm an electronic market maker for stocks. So what that means is the data that I analyze is more specifically do with price information, right, related to stocks that we trade, right?
Okay.
So as a quant, what my day to day looks like is first of all, my most important job is I'm a trader. So in the morning, stock market opens at 9:30. I get into the office early, right? I have to prepare our trading system to be ready for the day. So usually the day would start at 7, go all the way to 9:30 is preparation, right? And then the market would start trading. Our trading is fully automated, so there isn't really much for a trader to do. And that's when I would start essentially my day for research or quantitative analysis. So this is where, for a majority of the day, I would be essentially working on the projects which are usually long term and related to, how we can trade a stock better, how we can provide liquidity better for our clients. So in terms of the question that you asked about, I think the second one was, what is a bank like, and hedge funds, and what are electronic market makers and how do they sit
Right.
in the picture?
What do you like? What is like the role like beyond what people believe in, like on Reddit and
Sure.
the news? Like, what is like a primary role of a market maker?
Yeah, for sure.
And like, what is difference between like a
Uh,
hedge fund trader and like what are their actual like job descriptions? First of all.
sure, yeah. So, to start off, electronic market makers provide liquidity for stocks. So, our primary responsibilities is to make sure that anyone who wants to trade in the stock market, right, they can access liquidity, meaning they can buy and sell a relatively large amount at a very reasonable price. So, essentially, we are setting the bids and offers in the marketplace for anyone who wants to buy or sell a stock, right? And if you can imagine, why do market makers exist? Well, it's because without us, you know, I would say the market is very unstable in the sense that there won't be a lot of natural buyers and sellers in the market.
Right. So
So,
in the
so
times
you need an
where
intermediate. Mhm.
right. So when the time when I want to buy a stock, but no one is trying to sell the stock, then a market maker would like sell it to me.
Exactly. Yeah. So we are like an intermediary. We would, provide that liquidity. In this case, you wanted to buy, we would sell it to you, right? And we hold that inventory temporary until someone else comes in, right? And is willing to say, sell the stocks to us. So in this case, we would complete a buy and sell transaction and essentially facilitate two sides of the trade.
Mm.
So what's different with a hedge fund trader and electronic market maker is really hedge fund traders. So I guess I can refer to them as traders on the buy side. What they're doing is very different. They're not actually trading. What they're doing is, so if you think of hedge funds, they're usually very relatively large size, right? They manage billions of dollars, very large portfolio. So they have when they trade a stock, right? So I think the way it works on I guess the buy side or the hedge fund side is you have portfolio managers who essentially uh, they do their research, and for example one day they say, hey, I want to buy or short 10 million shares of GameStop, right?
Yep.
Then then the hedge fund trader's role is to actually not to trade that stock, not to trade that 10 million, but rather they have their analysis, they have their contacts at different banks. And what their role is trying to essentially find the best algorithm that banks provide to best trade those 10 million shares.
Right,
So their
because you can't
role,
just like buy $10 million worth of
exactly.
a stock at a
Yeah.
given point in
Yeah.
time.
So you can think of us as on the sell side, which is the banks. What we're specializing in is coming up with the best tools to help facilitate anyone that wants to trade. And the hedge funds, the traders on the hedge fund sides, what they're doing is they're doing analysis on all the different banks and all the different tools that different banks provide. And given a situation, because they're familiar with all the tools that are accessible, right? They would be able to say, okay, in this trade, I think RBC's tool is the best. We can give this trade to RBC, right? Maybe a different trade, they're like, okay, this other bank has a better tool for that situation.
Mm,
So their role is more if they would do a lot of analytics on which bank's tool is best for which situation. And from there, they would send down that trade, and then traders on the bank side or market makers will help and facilitate the transaction.
right, I see. That makes a lot of sense.
Mhm,
So
mhm.
as a hedge fund manager, all I do is look at the stock market, look at my
Yeah.
portfolio, see what
Mhm,
stocks are good to buy, see what good stocks are good to sell. And then I go
Yeah,
to
exactly.
RBC or other firms with algorithms, and I
Mhm.
facilitate my orders, the best means possible.
Yeah, exactly. So a hedge fund typically will have a lot of different strategies and a lot of different teams. So what they do is they have an aggregation on their side where maybe 10 different portfolio managers have different buy and sells indications, right? And a hedge fund trader would aggregate all those orders and then send it down to the market makers on the sell side to help facilitate that trade. Mhm.
I see. That makes a lot of sense. So it seems like from all the news, I'm making out the idea that
Uh-huh.
Melvin Capital, the hedge fund that is
Yeah.
top headlines, had the
Mhm.
idea to short the stock. So shorting,
Mhm.
I correct me if I'm wrong, is selling the stock that you don't have. So you
Mhm.
borrow it from someone else, and then you
Yeah.
sell it to someone else, and then
Mhm.
hope that the price will go down. So later, when you cover yourself by buying back the stock, so you have a zero
Mhm.
position, the stock
Yep.
price would have dropped. So you just sold high and bought low, and you make the difference.
Exactly.
So
Yes.
how does
Mhm.
first of all, is it
Mhm.
true, or at least is it possible that any particular institution can short 130% or more than 100% of the shares outstanding for a given stock? Is that even possible?
It is definitely possible. You can think of it like this. Let's say I have a single share of a stock, right?
Yeah.
What someone can do is they borrow it from me, and then they sell in the market, right, for a certain price, right?
Okay.
But then maybe what's happening is, well, now you have sold that one share to someone else who is long effectively that one share, and maybe that person would borrow it to someone else, and then someone else is now secure that borrow one share, and then this kind of process could continue where maybe the same share is borrowed multiple times, right?
All
Potentially.
right, I see. So it's like a
So
chain of
so
people
yeah,
borrowing.
so I'm not too familiar on the borrow and the sort of settlement process, right? But
Okay.
typically this scenario could happen, right? And what happens is, people would chase down the borrow, right? So depending on who your counterparty is, one person would chase this person for example, their GameStop shares, and well, this person don't have it yet because they borrowed it to someone else,
Uh-oh.
right? And then
That's
that
where the
person
problem
will
is.
go and chase.
I
So
see.
in the case of like how is it possible to short 130%? It is definitely possible. There are a lot of market intricacies. For example, like options market makers, they can short a stock without securing a borrow, right? So that could also be another way to have shorted a lot of stocks to hedge themselves without
Right.
securing a borrow.
So now I have a question. So what is
Yeah.
like
Mhm.
so as far as I'm concerned, there's something called the borrow fee, which
Mhm.
basically kind of disencourages people to short a stock and then keep that short position forever.
Mhm.
So
Mhm.
in this case, like for normal stocks, let's say for like if I
Yeah.
don't think,
Mhm.
let's say Amazon is overvalued and I want to short a Amazon stock,
Mhm. Mhm.
how much borrow fee would I pay on like a normal stock with let's say an average amount of short interest or short float?
Sure. I guess I'll give an example. So I guess for our trading team, we would borrow, Spider, which is like the most, I guess, liquid instrument in the world, right?
Mm-hmm.
It's the largest ETF that tracks S&P 500, and I
Yep.
believe the borrow cost is 0.5% annual of
So
your
I
notional.
only pay 0.5% of the value of
Mhm.
S&P
Mhm.
500 ETF
Yeah,
if I
yeah.
shorted
So
that per
yeah,
year.
so let's per year. So
That's cheap.
if the stock went down by, let's say, point 0.5, more than 0.5%, right? Then effectively you have gained a little bit, right? You pay down your interest, and then you buy it back, and then you return your borrow, you lock in whatever it is. But it varies very much depending on the liquidity of the stock that you're talking about. So in the situation of GameStop, if you can consider the case where some portion of it is owned by the original owners of GameStop, and now
Mm-hmm.
you have Reddit. Now you have Reddit traders who are
Yep. The
they're never willing to borrow out their stock, right? They're effectively holding it down.
Yep.
Then the lines get thinner and thinner in the sense that if you've shorted the stock, people are definitely chasing you down right now to ask you to return.
So how
Um,
much would be the borrow fee for GameStop then? And
it
is
could
it
it could be as much as like over 100%, very much.
wait, the borrow
Yeah,
fee could be over
it
100%. So if I sold the
it
stock
could be
at $5,
possible.
then
Yeah,
in a year I could have to pay the stock and then $5 more.
that's how short squeezes happen. Yeah, like sometimes if the stock is extremely illiquid, because you're taking on a lot of risk. It is essentially counterparty risk, right? Let's say you borrow the stock to Melvin Capital, they go
Mm-hmm.
bankrupt, they can't return you anything. Well, that's counterparty risk. So as the liquidity gets thinner and thinner, which is what's happening on GameStop, I can only imagine the fee to borrow the stock will get higher and higher. So it could be very much above 100%.
Right. So
But
and
that's a
then
little bit crazy. So maybe I'm just speculating here.
right, but it
I'm
could
assuming
be
people right now
higher.
is it could be even, yeah, it could be higher. Um, but
So so
yeah,
it
it's
is
$300 right now. So it
right.
could go that it could go back down to $5. You could, yeah, who knows?
So basically, some people on Reddit on this subreddit called Wall Street Bets
Uh-huh.
found out this information that this stock is shorted like beyond reason, like 130% or something like that, and then
Yeah.
realized that whoever is shorting the stock needs to pay interest and will have to buy it soon, right? And
Yes.
if you buy a stock, it'll drive up the price. So the
Mhm.
guy decides to use supply and demand to his advantage and buy the stock beforehand, and
Mhm.
that's a short squeeze.
Yeah, it's brilliant, and it has happened actually quite a few times in history. Because I was also curious, so I was looking back at history
Okay.
to try and see what might go down this time. So in 2008, there was the case of uh, Volkswagen,
Oh, okay.
um,
What happened?
right?
What happened there?
So Volkswagen had short interest only 12%.
Wait,
Okay,
this is
so
1/10,
the,
less than 1/10 of.
less of the float. But what's interesting there was the government was holding 20% of the floating shares, and then this company Porsche, they bought up. additional shares, and their holding interest increased all the way to 74%.
Wait,
So I
so
think what
the Porsche shorted Volkswagen?
no, Porsche was long Volkswagen,
Okay.
and they were holding, I think, about 75%
Oh,
of
so
the
Porsche basically
the
owned
flow.
Volkswagen.
Yeah, and then so you have this scenario where Porsche owns 75%, government owns 20%,
Mm-hmm.
right? And the retail investor probably owns another 3 or 4%.
Mm-hmm.
So the flow there ended up being like 1% was available to trade, and you had 12% of short interest.
Oh,
So
I see. Because there was so little
yeah,
liquidity left over
yeah.
for people to trade with, because
So
it was so
exactly.
tightly held by these other institutions, 12%
Yeah.
actually meant a lot.
Yes, exactly.
Oh, that
So
makes a lot of sense. Because
this
Volkswagen is a huge company.
yeah, so there was a financial crisis. People were shorting it because nobody was buying cars, and they thought they were going to go bankrupt. But the stock went up all the way to, I think, it was the most expensive company for intraday for a little bit, during the short squeeze, and it went all the way up to $1,000 per share.
So, how legal is short selling or not short selling? Selling
Uh-huh,
is legal as far as I can tell. How
uh-huh,
legal is short squeezing rather? Like how like
uh-huh.
is it justifiable because it's like a matter of supply and demand? It's like, oh, I'll buy it earlier than you because I know you're going to need it later, or is it a form of market manipulation? Like there's a lot of like debate going on. It's like, is well, who's doing the market manipulation? Like who, like is it
Yeah.
fair? Like you shouldn't be allowed to short 130% in the first place. Like
Uh-huh.
what, like I know there's a lot of gray lines here. Like what are the
Yeah.
facts that you know, and what is also your like opinion on like on top of those?
Yeah, so I'm actually not an expert on the laws, but honestly, if people like the stock, which in this case, all the Reddit traders, they love the stock,
They love the
right?
stock. They're just gonna buy and
They
hold the stock.
yeah, if people love the stock, they buy and hold it, and they're not willing to borrow to, there isn't much you can do there, right? What can you say? Oh, well, you're not allowed to hold this stock. So, I mean, I wouldn't say it's market manipulation. So my opinion on this, I just think that retail traders are, they're understanding the rule of the game, and they're leveraging it in a very smart way.
So finally, after a lot of people lost their jobs, unfortunately, they got stimulus checks. They have some money, they have some time, and they come across this website called Wall Street Bets, or the subreddit
Yeah.
called Wall Street Bets, and they slowly learn how to trade. And one of these guys finds out what is a short squeeze and takes on this opportunity. So it kind of looks like,
Uh-huh.
you know,
Yeah.
this it makes sense. It's a logical it's a totally plausible event that's going on.
Mhm.
um
Yeah. Mhm.
so what do you take of like Robinhood and all these a lot of these other brokers like restricting trades? Like there's a lot of there's speculation, obviously nothing's confirmed yet.
Yeah.
Disclosure,
Mhm.
we don't give financial advice or any of that kind of stuff, but we're just trying to understand like what's going on
Yeah.
here with rumors, and discuss like how plausible are these rumors. Like
Sure.
with
Sure.
there's
Mhm.
Citadel is injecting cash into Melvin Capital. Point 72 is
Yeah.
also involved as another hedge fund or asset management company.
Yeah.
Like what is going
Mhm.
on with all these drama, and like how legal, like first of all,
Uh-huh.
is it like what's going on with Robinhood and the mobile application that allows you to trade, and how they
Yeah.
blocked buying orders
Mhm.
for these
Mhm.
retail investors? First of all, is that legal?
So yeah. So first of all, it's I mean, that's why there's class action lawsuits happening, right?
Right.
Effectively, if you think of what the purpose of Robinhood is, well, they promise to let people buy and sell stocks anytime they want, and their majority of their user base are day traders, right, who wanted to buy and sell stocks on a very short duration of time. And when you limit people's ability to buy and sell, what you are is effectively stopping the price discovery process, right? So I was watching this video the other day, and it talks about sort of the definition of market manipulation, and one of the definition is you are knowingly, right, knowingly changing the supply and demand in the market which I believe they did, right? If you look at the price chart, um, was it Thursday that they stopped the trading? You saw that the
Yeah, I
stock,
believe it was
went,
Thursday, and they
you
allowed
know,
them to buy like a few shares on Friday.
yeah, like I think it's ridiculous because the stock went up all the way to $480, and then and then you just see the price plummets the moment they're like, hey, no more trading, right? It came all the way down to 125, I think, around that
And
low point,
what
and then the
is
next.
and the reason for that is like they need like cash to back up the settlement or something like that. I'm not sure how that works. Do you?
So it's collateral, right? It's you can think of it like, hey, if you're buying a house, right?
Yeah.
You need to put down your down payment. In this case, to settle a trade, you need to put down, a certain amount of cash. And what happened was, apparently, all these settlement firms says I need 100% of the collaterals, which I think is ridiculous. I think, like I mean the whole settlement system is honestly just broken, right? Stocks settle like T plus two, T plus one.
T plus two
It's not.
meaning 2 days after you purchase it.
Yeah, so it's very much an outdated process. That's why I think it's causing this issue. Um, but I do think it is fishy. Like it just looks so bad.
Right, because
On Robinhood.
my
Yeah,
money went away today and I bought the
yeah,
stock today and the stock
yeah,
shows up in my account today. And what do you mean it happens 2 days later? Like what do you mean, right?
yeah. Like I mean, like
So I
behind the
mean,
scenes,
is
there's a
is
lot of processes. Yeah.
right, but is what Robinhood's saying about like, oh, our hands are tied, like we couldn't do anything. We were actually trying to raise more capital for such that people can actually trade. Like, is what they're saying plausible? Like, is maybe they're not at fault here?
It is possible. It is definitely possible. I mean, if you think that like the trade are very speculative and getting very dangerous, and a lot of people are buying on margin, right? Which they could be on GameStop, then the chance of them not being able to pay back gets very high, right? So
Mm,
let's say Gary, you have $100,000 in
okay.
your Robinhood account, and I don't know how margin works. I never used Robinhood, but let's say you use margin, and all of a sudden it's effectively a $200,000 capital,
Right,
right?
I
You
borrowed
put
money.
all your Yeah, you borrow money, you put it all in GameStop. If the stock comes crashing down, you have no way of paying back, right? Then Robinhood is probably need to take that loss, right? That is why they're asking for 100% collateral, um, in
So
the
that's funny
clearinghouses. Mhm.
because Melvin Capital is allowed to short, but people short without like I don't know what the process was, but like it seems like there's
Yeah,
no trust on these retail investors, but there's definitely trust in Melvin Capital that's trying to short the stock 130%. Is that
yeah.
fair? Am I understanding this right? Like,
Mhm. Well, I mean, when we're talking about institution versus the individual investor, right?
yeah.
Which one has more credibility? Well, in this case, Melvin Capital probably put on some form of collateral as well, right?
Okay.
So I think the way you should view this is really it's a counterparty risk issue, right? And if you're borrowing money to someone that you don't know, right? You
Yeah.
probably ask for a little bit more, right? Than a large institution.
Mm-hmm.
So I think it's just a function of charging a fair amount of risk for the risk that you're taking on, right?
Right. And
In this case, the risk premium for retail investors is larger than
right.
institutional.
And I also want to ask people saying that, these
Yeah.
retail investors are actually, causing like a big impact on the market. To your knowledge, how much like how big does a role does retail investors play in these financial markets versus like uh, um, institutional clients? Like, is it enough to make a significant market impact? Like, is it possible that retail investors could actually, buy out an entire company using the power of the masses? Like, is this all possible, or or
Mhm.
is
So
some other bigger force at play here?
so I think that's a really great question. If you think about what's happening in the stock market, right there, there's so much money flowing around. I would say retail investors typically have a very, very small percentage, are very small percentage of the market, right? let me give you an example, right? So
Okay.
let's um, so typically, the quote sizes on the stock, right? For example, for even for GameStop, let's say
Okay.
it's 100 shares on both sides, right? So what that means is for you to move the stock by 1 cent,
Mm-hmm.
you need to spend $30,000, right? Because you need to buy out the 100 shares, you go active in the market, and you take that price level up, right?
Yeah.
So for $30,000, you're only able to move the stock by 1 cent, right?
Right.
And market makers can quickly replenish the quote, right?
Yep.
And maybe pushing that price back to that level. So the power of retail investors are typically considered very low, right? Because the amount of money that they're putting into a stock is typically very small, right? Much smaller than a single quote size, let alone pushing the price up by 50%. But if you have, let's say, 50 million people, 100 million people putting all their
All
money
over the world.
all over the world, I was looking at Wall Street Bets, there are people from Korea, China, everybody wants in on this thing, right? Well, then you could very much affect the price of the stock. But think about this: you all these people's money put into one stock. There are like so many stocks in the stock market, right? Even if everybody pull all their money and put it into one stock, you're only really affecting this one stock. But obviously, you saw it sold off in the market. People are suspecting that it's because people are selling their inventory to cover their short positions. I think there is definitely a rotation that's happening right now.
Okay.
So the effect is broader, right? In
Mm.
this case. Mhm.
So, when separated, retail investors don't make a lot of impact, but when combined, it can actually have a pretty substantial impact.
Yeah, yeah,
So,
absolutely.
in your prediction, in your mind, obviously,
Mhm.
we're not going to hold you accountable for what you say, but how does this all play out? How is this all going to play out in the future? Like, is someone going to go to jail? Is this all natural? Like, is some regulation going to change?
Yeah,
Like, obviously, stock could go anywhere. It could go up to $1,000, or it could come back to like $5. Nobody knows. But
Mhm.
what does it play out, like after the fact that the, dust settles? Like,
Sure,
obviously some people
sure.
win money, some people lose money. Melvin Capital definitely lost a lot of money. Um,
Mhm.
what do you think happens, after GameStop, or like after the dust settles at least?
Yeah, I think there definitely needs to be more regulations, right? The fact that the GameStop was short of 130, 140% in the first place
Right, which is
is something that
crazy.
is ridiculous, right? That's and you know like if you look at what is it, Citron Research, they already said we're not going to publish any more short research. I
Right.
think the event that we're seeing last week is actually putting a lot of confidence in retail investors. I think moving forward, people will be more confident, right? They will believe that they have more power. Um, online, day-to-day traders. I think they realize the power of the group, and they will continue to use that to make whatever investment thesis they have popular and drive up a stock potentially.
It's the power of the masses.
Yeah, I mean, when I was looking at Wall Street Bet, what it has like 8 million followers now,
Oh my goodness,
right?
that's a lot of people.
Yeah, maybe like 7.5 or 8 million. That's a lot of people, right? And everyone has different level of wealth, but if everybody loves a single idea, the stock
Everybody
price is going to
invests
go up.
$10, which is very reasonable to do, and you have $75 million.
Yeah, exactly.
Everybody invests
So
$100, which could be potentially possible. Uh,
yeah,
that's $750 million. So
yeah,
they definitely
exactly.
do have some market impact here. So
Yeah, for
we'll,
sure.
we'll definitely keep an eye out on what happens here. Thank you for all that
Mhm.
information on GameStop. It's definitely a crazy place out there. Now I want to
Sure.
ask another question. We won't spend all our time here talking about GameStop. We also want
Mhm.
to ask some general questions about like how's it working as a quant. There's a lot of rumors about long hours, lots of money. Typical Wall Street kind of ideas. So I just want to kind of first of all address these rumors. What
Sure.
is true? What is false? What is like the reality versus what is what is not. So can you first talk to me about like what's a rumor, what's true, and like how is your day to day actually?
Yeah, that sounds good. So at least for the team that I'm working with, we are very flexible, right? So if you think about our team, well, our main responsibility is providing liquidity to the market,
Mm-hmm.
and we already have developed a lot of automated strategies that trades automatically. So there isn't really a lot of things that we need to do during the day, right? So our hours are a little bit more flexible. So for me, I'm an early person, so I typically wake up and start working by 6:30, and I will end my workday around 5, right? But people can definitely, I don't know, like get to work
So it's
at eight
because these
o'clock.
algorithms and systems are all automated with software and technology, you
Mhm.
actually have a lot of flexibility in what you do during the day.
Exactly, exactly. So I think it's definitely it's a really fun job, right?
Sounds like a
You're
hella good job. You just have to sit around and watch the system make money. Is it? I'm sure that's wrong.
well,
How?
sure. Yeah, like well, making money is very difficult in the stock market. That's one thing I learned in the past few years. Um, if you think about it, there are a lot of firms out there. There are a lot of market makers out there who are all competing for for trading volume in the market, right? When you route an order to the market, there are 50, 100 market makers on the other side who's willing to provide you that liquidity. So it's
Oh,
very
so
much
like the bid and ask becomes narrower and narrower.
yeah, yeah. Which is why I think market makers adds a lot of value to the world because in the case of GameStop, market makers can't stop providing liquidity.
Man, you know what
They
we
have to.
need is market makers. When I exchange money to a different currency, man, when I go to a bank, I get charged such different numbers from what I find on Google. It's crazy. Like we need like tens of thousands of market makers on like Forex. Like
So unfortunately there are market makers on forex. Foreign currencies actually trades at an extremely tight spread. But what's happening is those access are usually for institutional investors. Because retail investors, I think you trade at such a low quantity. You usually, I don't know actually how forex trade, but you do pay a worse price. That's definitely
I
true.
pay such a bad price.
Such a bad price, yeah. But there are a lot of market makers for currencies.
Oh,
That's
I
the
see.
thing.
So it's just that, as a little guy, I don't have access to, the better quality, markets to get my USD.
I believe so.
Oh,
Yeah.
that sucks, man. That sucks. No wonder people are upset, right? See? And what is
Yeah.
it? Robinhood sells the retail investor market data to Citadel, and that's how they make the
Yeah.
money.
So yeah, maybe we can just explain a little bit of that. So if you think about Robinhood,
Yeah.
um, the trading is free, right? But
Yeah.
what's happening is they're actually selling your order directly to a market maker. So what that means is your order doesn't go to the exchange and trades with liquidity that's sitting on the exchange, but rather it goes to a market maker's inventory directly. Um, so in this case, for example, Gary, you buy one share of GameStop, right?
Yeah.
At let's say $350. Then what's going to happen is Citadel is going to fill you right away at that price, right? So it's going to be in the context of what the price is in the market at the time, but you will get a guaranteed execution right away.
So if
So
I'm using Robinhood, I'm
mhm.
trading against Citadel.
Yes, that's correct. Yes, Citadel is your counterparty, and well, part of my suspicion here on what could have went down in last week's is if you think about GameStop, every single person that is submitting their orders to Robinhood, they're buying, right?
From
So what
Citadel.
that yeah, buying from Citadel, what's happening is Citadel is probably massively short the stock just from this natural flow that retail
Uh-oh.
players are sending them. So
Right.
so they could very much be losing a lot of money
So that's
because
why Citadel
typically
told Robinhood to stop trading.
that could be one of the conspiracy theory here. I mean, we don't have any proof, but I do suspect market makers lost a ton of money last week.
Oh man.
Just simply because if you think about this game, so typically market makers, they have, relatively sophisticated risk management system,
Mm-hmm.
meaning, let's say you're massively short one stock, what they would do is they would buy another stock to hedge your risk, right? But
Right.
because GameStop is just, there's no way for you to hedge GameStop. It's just it's a random movement, right?
There's
Like
not nothing quite like it.
nothing quite like it.
So
So you
it
can
is like
buy everything
it's hedging
from
your
the market.
risk. Basically, let's say you have American Airlines and Delta Airlines, where they're both airlines and they move very similar, and
Exactly.
you end up through the day's course or the week's course, you end up with a very long or short position of like either stock, and
Mhm.
to kind of hedge that risk, because they move
Exactly.
very similar, you do
Mhm.
the opposite for the other stock, and because they move
Yes.
similar, you don't lose out on too much, because if both of them go up, you lose money on one, but you gain money on the other.
That's exactly right.
But they couldn't do that
Because
with GameStop, because GameStop is it's so unique. There's nothing to hedge it with.
yeah, exactly. So what I suspect is because they buy this order flow, right? Typically they would expect people to buy and sell, right? So maybe the flow imbalance isn't that bad. But last week,
It's all
probably
buys.
everybody,
It's all
it's
buys.
all buys. Yeah.
That's
So
crazy.
what I would imagine is Citadel is probably short like 1 million like shares, 2 million shares of GameStop throughout the day. And
Oh
then
man.
they're like, okay, we can't take this risk anymore. Like we gotta buy, right? Well, so
So
I
is it
mean that
true that is there any way out of this, like as Citadel, as Melvin Capital, who are like massively holding these short positions on these stocks, like do they have any other way other than just pulling up the white flag and just buying at the high price, or can they do a bailout? Like what's their options here?
I mean what they could do is like talk to holders of GameStop on the institutional side, right? Because maybe the executives themselves still hold a reasonable amount of shares, right? So
Okay.
they could like talk about a deal size where it's like, hey, I'm willing to buy out the company like 30 million floats, at this price. This is maybe $20. Hey, your stock was only five. We're willing to pay you this much. Okay?
So they
So
would
they
have
could
like a slightly discounted deal with some other like large institution.
exactly like for
Mm,
people that are long, right? I mean, most likely they're gonna need to buy some in the market. So I
mm.
don't think the short squeeze has happened yet, but um, I think the sooner it goes to $5,000, the the shorter their ropes get. So retail investors, if they want to complete the short squeeze, they need to continue to push the price.
Mm. So
The
it is
faster it
true.
happens,
This is kind of a valid, very valid strategy that these retail investors has caught upon.
yeah,
It's not speculation. It's exactly a matter of supply and demand.
yeah, I think it's brilliant. I mean, what they're doing, and
I'm so
it's
glad
unfortunate.
that
Uh-huh.
people. I don't obviously. I'm not aware of the demographic of these retail investors that are involved in GameStop, but I'm so glad that they're like doing this research into how the marketplace works, because and learning about it, and not just buying random stocks. They actually did the research and
Yeah,
found out that this is an opportunity for them. Obviously has created quite a big news and trouble for others, but it's a very valid strategy as far as I can tell.
Mhm.
So that's great. So another question is, you said create you do quantitative research and analysis into stocks and how to trade stocks, and how to best provide liquidity for the market. What
Right.
is typically involved in that process? Like, what do you like? How do you just look at a stock and come up with things? Like,
Sure.
what does your research process work?
Sure. Let me give like a hypothetical example. So, for example, one of the questions I want to ask is, hey, how can I provide as much liquidity as possible at any given time for investors, right? Without losing money, right? That could be like a very general question that I want to ask, right? And so depending on the stock, well, the sort of data that we have is, how much volume the stock is traded, what the typical quote size is, how volatile the stock is, right?
Mm-hmm.
From there, I could form, essentially assumptions about, what kind of, if I post, say, 1,000 shares at this price, right?
Mm-hmm.
Historically, hypothetically, how would that strategy has performed, right? So I come up with some kind of logic to post or like in the historical market, and I can backtest, right? I can look at how this strategy will perform and make assumptions, and then
So it's kind of like a
continue.
scientific process as to like making a guess, testing it,
Exactly.
and
It,
iterating
it,
it.
it's a, exactly. It's very much you have a hypothesis about how stocks trade. You test the hypothesis. You build backtesting systems. You see how the hypothesis actually play out, right? And then if it looks good, then you deploy it to production and you see how it actually performs in the stock market.
And another question is, there's a huge speculation about, we have PhD in physics, like these, MIT graduates who come out
Yeah.
of school and who are experts in math and physics and science that just come up with these, like, crazy algorithms. Like, how much of like prior education for you has played a role in becoming a quant and finding success in that career, and
Sure.
if it isn't, then like did you learn everything on the job, like what is it out like there?
Yeah, so I would say for our team specifically, we are all undergraduates, right? So, and we have had, I would say, a relatively good amount of success. But obviously, I just started my career. I just
So everybody in your team
graduated.
is like undergraduate degree, like not even a master's degree, no PhD.
So I think
Wow, so you
I
guys
think
must be
about
some smart cookies out there.
so I would say, if you look at the world nowadays, education is so easily accessible. We can all learn on our own. So, education, your degree, bachelor, master, or PhD, it's just a very traditional signal, right? To signal how much you know and what you're capable of.
Right.
But what I believe in is, nowadays, because information is so easily accessible, we all learn on our own. For example, like I just bought a textbook and I'm reading through, relatively advanced like machine learning and statistics, just trying to learn and pick up on what the state of the art is, right? So
Right.
my knowledge could very much, be at the same level as someone with a more advanced degree. It's just that I didn't, go to school for an actual program.
Right, so you just chose to learn it from different sources instead of going to school for it.
Yeah, and
I
honestly,
totally
what
support that.
yeah, and honestly, what I believe in is, I've been working at RBC for, I was an intern for 2 years, full time for a year. What I observe is, especially on the quant side, what is you don't need to be a Six Sigma genius. What I believe in is you just need to be smart enough, right? I think that
Mm,
there are always the very very difficult problems that you can solve if you choose to, but there are also very very simple problems that has simple solutions, right? I guess the analogy is like, hey, you have a very simple problem. You're not going to use like deep neural networks to solve it when you can just use a regression model, right? Just
right, I see.
so at our workplace, in our team, we very much prefer the simple approach, and the simple approach has worked relatively well.
I like that.
Um,
It's like, what is that saying? It's Occam's razor, right? It's like, the simple solution is usually the right one. Or like the
exactly.
straightforward explanation is the
Yeah.
correct one.
But obviously, like, um, I would say maybe the Canadian landscape is potentially less competitive, right, than
Mm-hmm.
the US landscape. So maybe a electronic market maker in the US does need to have extreme sophisticated knowledge because it's so competitive there, right?
Mm,
Maybe the simple problems have already been solved, and it requires a large amount of sophistication to be able to make money or
right.
build a business. Yeah.
Yeah, that's crazy to think. Like
Yeah.
how much competition is out there to like make money on Wall Street. It's definitely crazy, but it is empowering to hear
Yeah.
that everyday folks like that
Yeah.
can go online and learn how to trade stock, and it's not
Yeah.
a simple like if you find a simple enough problem, you can have a simple enough solution. That's
Mhm.
definitely empowering to hear. So I'm very curious about your past, Thomas. So like
Mhm.
it seems like quant finance, market making, electronic trading, all seems very it seems sophisticated. Like at least from a rumor, at least from an outsider's perspective, it sounds very distant. It sounds very scary. How
Mhm.
did you find this interest in the first place, and like how did you navigate yourself towards being in the position that you are? Like, did you always know you wanted to become a quant, or like I somehow doubt that, but like
Yeah.
what was it like?
Yeah.
Like how did you
Uh,
find the interest?
sure. Yeah. Um, so I'll go back a little bit, a few years. I would say my parents had a large influence on my career path up to now. So when you and I, we both went to U of T, University of Toronto. Um, in their first year, when you're an 18-year-old kid, they ask you, "Hey, what do you want to study?" Right?
Right, and it's the most
For me,
scary
yeah,
question. Is like I don't know what I
yeah,
want to
so,
do.
yeah. Well, am I degenerate if I don't know what I
Uh
want?
oh. What if I
So,
just don't want
I
to do
mean,
anything?
yeah. So for me, at least at the time, I had no clue what I wanted to do. In high school, I just played a lot of video games, so I had no clue what I wanted to do.
Mm,
Well, my parents were like, if you don't know what you want to do, you should study something general, right? So my program that I ended up choosing was is applied mathematics in economics and finance and statistics, right? So these are all very, very general technical programs, right?
mm.
And you could end up doing a lot of different things, which I think looking back, that was a really smart choice. Because if you don't know what you want to do, then you got to be a generalist to begin with. So
That's a good
my path,
strategy.
yeah. So my path is, I was in the program at U of T. I got to talk to a lot of people, and it seems like everybody was very fascinated by this quant world, right? Quantitative finance, and people were talking about this program called Master of Mathematical Finance, which was
Mm,
a master program at U of T.
mm-hmm.
And at the time, I thought, okay, well, maybe that sounds interesting. That seems like a stable job. Um, that pays well. Seems like it could be something interesting, right? But again, like I was only like 20-year-old, like I didn't really know. So I would say my actual interest for, I guess, more quantitative finance really started at my first internship. So I did an internship in China.
Okay.
Um, so yeah, at the time I remember I was extremely lost. I actually didn't know what I wanted to do, and I tried to find internships just to, dip my toes in there. So I got my first one. It was quantitative research, and I was actually doing it in China. Um,
Okay, and I assume China has, just as big, if not bigger, competition, compared to the U.S. And so you must have like, is it
so
true? Like, how?
actually, no, not at all.
Not at all.
Chinese market
Okay.
in China, you can't even short a stock. You don't even have options. You don't have derivatives. The
Oh, it's just
Chinese
pure vanilla buy low, sell high. Can't buy high, sell low.
Yeah, I don't even know how market making will work in China, but I would say the Chinese financial market is very, very different um, than Canada and US, and there's more of a political, um, like driven market instead of a free market. I would say in North America.
Right.
Mhm. Like for example, like one of the old rule was like, if you're a foreign company, you want to enter Chinese market, the Chinese government needs to hold like 50% or 49% of your company,
Wait,
right?
what?
Yeah,
That's
yeah. So
crazy.
like, yeah. So what ends up happening is, like North American companies that enter China, they actually have to, well, they start off a new branch that's merged with, uh, the Chinese government, right? And the Chinese government holds a large amount of, interest in your company.
Mm,
So the stock market in China is not, I would say, as easily accessible.
right, that makes a lot of sense. I would have expected anything other than that. To be honest, in hindsight, with China being having so much control over like their economy and whatnot.
Yeah, so but my interest really started there. So I didn't do much in my internship other than reading research papers. And I remember, as I was reading through just really interesting research papers about quantitative finance in
Hmm.
China, I started to see all the things I learned in school
Hmm.
was actually used a little bit, because when I was in class, I was always thinking, who is going to use all these stuff, right? What are all these math
It seems
notations?
so far
Like,
away.
who cares? Seems so far away, but when I was on the job, I saw, oh wow, this is how people use a regression. Okay, that seems to make sense. That's actually really cool.
Mm.
So from that internship, I was able to, I would say, I was truly passionate about it. Like, I remember, like, because my commute for my internship was 1.5 hour one way
Oh
in
my god.
China. Yeah, so every single day I commuted for 3 hours. So it was, yeah, like for 4 months, but I wasn't tired of it. Like, I loved the job. Like, it was interesting. I
You found
remember
your
like
passion through
reading.
the internship. That's a that's a great story to hear.
Yeah, like I remember like I would be reading research paper on the way of the commute and reading research paper on the way back, just because I was so interested in these
And
new
these research papers are like about like financial markets in like in the broader sense, or like related
yeah.
to your
So
job
so
and stuff like that. Because I
so for
haven't seen a
example,
research paper on like how to trade. Like,
oh
you
yeah,
know, no one
no,
really
no, yeah.
publishes
So
that kind
so
of paper, right?
so a lot of the research that I was doing was it was trying to study momentum and trying to study risk factors.
Right.
That was sort of my internship. So like the way that people manage risk, and because managing risk is not as monetary directly associated with it, so there's actually a large amount of literature out there that are available for people to
Mm,
study and learn about how institutions manage their risk. So majority of the readings was actually done on that.
I see. That makes a lot of sense. And then you found your passion through internship, and finally you landed yourself at RBC, the biggest bank in Canada. So once again, congratulations on landing your full time job. I'm sure
Thanks.
you're
Yeah.
enjoying it quite a bit.
Yeah.
And lastly, I want to kind of like wrap it up on like the quant finance and market making and GameStop and all that. I just want to talk about like something you do outside of work. Like what does a quant researcher, quant trader do outside of work? I understand you're quite the pianist. I was actually there to listen to you playing piano once. It's brilliant. It's amazing.
Oh, thank you.
Um,
Thank you. That's very kind.
so,
Uh,
like, do you still play? Like, what do you do outside of work, like, including piano?
sure. Sure. Yeah, yeah, for sure. I would say, and this is something that I realized in the past 2 years. I would say in the past 6 years, right? So I'm 24. When I went to university, I was very
Okay.
much focused on building my career. I was trying to figure out what I wanted to do with a job, right?
Right.
And I would say it wasn't until like 21, 22 when I started to think about what I actually enjoy to do and what kind of person I actually am, right? That's when I would say, so I always played piano when I was little, um, but I did it because my parents wanted me to. Um, I didn't really like it until I would say last 2 years of high school. So that was a really great hobby of mine.
Mm,
But it wasn't until when I was 21, 22 when I realized that I would say having a job doesn't define who you are at all, right? Every single day you get off work, there's still so much time. There's
Oh
still so
man.
much time in the world for you to do your own stuff, right? So to be honest, like I believe, finding who you are is very much an active process instead of a very passive one. I
Mm,
often read online about people saying, "Oh, um, I don't really know who I am." Well, like the view that I take on that is you're actually a person who, um, you know, you take ownership and you take the lead in what kind of person you want to be. I don't think it's something that passively comes to you, right?
oh,
I think it's
100%, 100% agree.
yeah. So for me, what I realized was what I guess a couple years back is I was very ignorant on the world, and I started reading a lot of books because I didn't really know who I was, to be honest.
Mm-hmm.
I was Thomas. I have a job. I just started my internship at RBC, but other than that, like I play piano. I wanted to find answers. I wanted to take an active role, right, in
Mm,
seeking out. And so I started building habits. I started, working out. I started to read. I started to play more piano and actually really enjoy it. Um, and it wasn't until I started taking this active ownership that I stopped questioning, right? And instead just do things and try things out. So nowadays, outside of work, I do a lot of those stuff that I just talked about, which is I still play video games, but I also work out. Like I like to read, play piano. I like doing things like this. Calling with you, Gary, calling with some other friends, just catching up. And yeah, that's all I do.
that's great to hear. That's great to hear. And I 100% agree with the idea that, like finding what you like to do is an active process, also not just like outside of work, but also I admire the side where you're like, oh, you decided to, take your parents' advice and keep things general and, actively you found what you like both in terms of career and otherwise. So that's
Yeah,
really good to hear.
yeah, absolutely. And I mean, Gary, you're taking an active role in, I guess, starting out your podcast. Finding your stuff. So I also
Absolutely.
admire your courage.
Absolutely. I guess we have some similarities there. So that's
Yeah.
so. I want to wrap things up, Thomas. So
Sure.
what's next for you? Like as a young individual starting out in quant finance. Obviously that's a pretty big job, biggest company in Canada. Quite involved. Quite like intelligent, intelligence heavy work. What is next for you? Like, is it just like straight, climbing the corporate ladder?
Mhm.
What do you have in mind, and like what do you want to happen in like the next a few years, the time scope? What's
For
next for you?
sure. So I'm someone who firmly believes that when you're planning for stuff, you can never be too specific. So for me, I'm gonna keep it very general. My fundamental philosophy is the work that I do needs to have a strong positive impact for the world, right?
Mm-hmm.
Um,
Okay,
the way
very
that the way
philanthropic,
that
very
so
altruistic.
for me, I believe that if the more value that your work has. So in this case, for example, for market making, we are providing a lot of liquidity to retail clients. They're saving a lot of money every single day because we're there to provide liquidity at a certain price.
Mm.
Right? People are able to build wealth. They're able to trade cheaply. So I see a lot of value in that work. But in terms of my future, what I see is I want to continue to build on my skill sets. I want to expand my worldview, right? And perhaps one day I'll see, hey, I think this other project or this other job actually provides more value for people in general, right?
Mm-hmm.
And I think that's the time when I will make a pivot and try something new, try to do something that's, more impactful, right? More powerful. But I do believe in the value of also um, building up your skill sets first, before you take on the harder challenges.
That
So
makes a lot of sense.
that is my plan right now. Yeah.
So in your shoes, in your perspective and in your situation, like what's
Mhm.
involved in growing your skills? Is it like more
Sure.
research papers? Like what's
Um,
and how much do people skills in general, like not talking about anything in particular, but like people skills play a role in your career, especially being in a bank, but also in being as a quant, it kind of,
yeah,
you
yeah.
might have to balance that, right? Like, so.
So that's one thing that I was just gonna say, which is I think being firm in knowing who you are, being confident, being able to communicate your ideas is a skill that's not only relevant to your career, but also how you live a life in general, right? I believe that if you want to live a really great life, you need to explore ideas. You need to be able to adapt and continue to grow yourself, right? I don't think people are static. I think people continue to grow over time.
Mm-hmm.
So for me, the most important thing is continue to read outside of work. I'm reading a bunch of interesting books
Mm-hmm.
that expand my horizon. And at work, I'm working on statistics. I'm trying to build my data science skills. And in terms of presentation, um, I would say people skill probably matters a lot more in the long run than your
Mm.
technical skills. Just because if you think about it, like let's say you could be the greatest programmer in the world, right?
Mm-hmm.
And you work at a single company for 20 years. You're not going to be doing programming after you're at the company for 20 years. You're going to be a leader. You're going to be leading other people. You're going to be guiding directions for projects instead of doing the technical work, right? And I think it's important to build a solid foundation early on for your leadership skill, for your people skill. So it is something that I try to work on a very frequent basis. Through conversations like this, I get to practice. I get to talk about ideas, that are always good. I also try to read a lot. That improves, your literacy skill, right?
Mm-hmm. Absolutely.
Mhm.
Great. That's a lot of good insight. That's a lot of good life advice in general. So why don't we end off why don't we end off
Sure.
with like what are you reading these days? Like why don't we end off with that?
Sure. Yes.
Recommend us a book.
So one book that I just finished yesterday is actually called The Laws of Human Nature.
Okay.
So it is a book on psychology and it's extremely fascinating. I would recommend anyone who's young in their 20s or even if you're older to read about this because it talks about sort of if we think about who humans are, right? We are through a long time of evolution, right? There are a lot of inherent human nature
Right.
biases that are within us, right? We tend to be more emotional, even though we like to think we are very logical.
Mm-hmm.
Um, there are a lot of interesting human psychology that are embedded in our unconsciousness. I think through understanding these unconsciousness, you'll be able to actually learn more about yourself and your own decision making process.
Mm.
So definitely recommend that book. That's one of my favorite books I've ever
Awesome. Thank you, Thomas. That's
read.
Thomas, it's been a genuine pleasure and a half. Thank you
Thank you
for
so
all the
much.
information. It's very insightful, and I'll definitely take a read on that book later.
Sure. Thank you so much for your time, Gary. And yeah,
Sounds
and
good. Thank you, Thomas.